up with Kunal as well is that we may have corrected 10-11% from top, but small cap index. I was looking at some of the most trader favorite or HNI favorite names, say Swan, say DB Realty, Engineers India, Dredging Corp. Most of these stocks are already down, 30, 40, in some cases 45, 50%.
Correct.
Can we say with, high degree of confidence now, Kunal, that we should not wait for the small cap index as a whole to correct 25-30%.
Correct.
But half or say 30-40% of the ingredients have already corrected that much. Is that a right way, or you wouldn't be that?
No, I think it's a perfect way to look at, Ajay, because first of all, not all stocks will correct in the same manner. The high beta stocks will correct more. The low beta stocks or the formidable ones will correct far more less. Just to give a very simple example, on the PSU banking index overall, SBI has just corrected, I think, 9% or 10% from its swing highs, as compared to many of the other PSU banking stocks, which have corrected by a degree of, I think, 25 to 30% also, the mid-cap ones. So that itself tells you that the high beta ones or the index may not replicate exactly what happens to the stocks. Now, there are two very important data points or interesting data points which I've called out. One is that I've looked at the market breadth indicator, which actually has come back to that March 2023 levels for the overall market. So at current levels where we are in terms of the indices, we are actually, if we've tapped back into a strong oversold territory on the market breadth. So this is not on the index front, this is on the overall market market front. So that indicates that we probably would have hit a bottom, or in the next 1 or 2 days, so I think we should be hitting a major bottom for the overall market breadth, and we could probably be seeing a significant rally for the overall market as well as indices. And the second and the most important part is midway, when the indices were down some 150 points, 500 points on the bank Nifty, the put call ratio had entered into 0.45, 0.5 levels. These are again very strong sentiment indicators that was extremely pessimistic at the lows of the day intraday for the indices. That's where you should see a very strong relief rally.
In fact, that's a very pertinent point, Ajay, that you made, that, why wait for the index to bottom out when the maximum pain point was in individual portfolios, some of the HNI portfolios, and those stocks have already fallen about, 30 to 40 odd percent.
And there are only 6 trading days left for 31st
this month,
March.
yeah.
We are already seeing early signs that forced liquidation, and this is a typical pattern which plays out. I've been speaking with some of the big HNIs across the country. Suppose you're running a 1,000 crore portfolio dedicated on the mid-cap, small-cap side, they tend to go overboard and run a 1,500 or 1,250 or 30-40% leverage in great times. The moment they start looking at the market turning, they start reducing, and the leverage gets wiped out completely at the bottom. And we got traces of that in the last 1 week or so. Anyways, there is another very important event to watch out for, and we'll wake up to that tomorrow morning, and that's the Fed meet. We've got Pankaj Murarka and Nooresh as well, who are joining us. Nooresh, let me come to you on the positioning of the market and the way we have reversed from 21,700, even Bank Nifty. Before we talk about some of the other fundamental factors, what are you reading on the charts right now?
So the good things which are happening is there is leadership. There are stocks also making new all-time highs. So you have a Maruti which is making an all-time high. You have an ICICI Bank which continues to hold on. So even in the heavyweights, we are seeing good enough recovery in a lot of stocks. And more importantly, the whole small cap and a mid cap rally in the last 6 months, wherein we went up 18-20%, say on the mid cap and the small cap indices. If you were to take it X of PSU stocks, it was 12-13%, which is not a great move per se in that case. So all the froth which was there in a lot of low float PSU names, etc., we've seen a 30-40% correction in a lot of railway names. So that is done. And at the same time, a lot of names which were not going up even before they've corrected, and they've been sideways. So if you look at the whole index, there's a bunch of stocks which have done nothing for last 2 years. So we do not expect them to correct 25-30%. So the whole index going on 25-30% looks difficult. So stocks could continue to bottom out as of now, one by one. Rather than waiting for the index, one should go stock specific cherry picking right now.
Tata Chemicals, that's the one which is cracking hard today. Tata Motors, Tata Steel, Tata Consumer. I mean, strangely, the Tata group of names is where you are seeing key pressure in today's trading session. Nooresh, any opportunity that you may have identified within the Tata group of names, Chemical, Motors, Consumer, or Tata Steel, perhaps short them further?
So at current levels, the short trade is off. And say Tata Chemical was on ban yesterday, so one could not do that trade also if one wanted to. Tata Steel is the most interesting name. That looks interesting on all dips going forward. 135, 140 is a base. The stock is coming back to the highs which was made in 2021. And once it sustains above that 155, 160 mark, it could get into momentum. So closer to 140 odd levels is a buy on dips for Tata Steel.
Okay, buy on